Hi everybody, welcome to Serene Education with the 4 major notes update for the 13th of March 2012. Just going to be looking at the 4 majors starting with the Euro. 4 time frames. Let's see what's happening. So, daily, let's see. Bit of a bounce yesterday, consolidation bounce yet again at a level of price support and resistance. You can quite clearly see that on that particular day, price hedging closer to the 50 period moving average and touching 13,100 and bouncing yesterday. Ideally, we'd like to see a break lower than that to see a continuation lower. There is a consolidation band now. You can quite clearly see that price has, on a number of occasions, used this particular area as a very clear support and a resistance going further back into the late December of last year. So clearly, if we wanted to see further downside movement, we wanted to see a nice bearish engulfing below that. However, price sentiment just pretty much finding further support at this area, and we're seeing a consolidation bounce to the upside. Bearish engulfing on Friday. We'd like to see if this is to continue lower, that momentum, that bearish sentiment creeping lower. We do need to see this 50 period moving average being breached and a bearish engulfing confirming that sentiment is still looking favorable short. As it stands at the moment now, we're seeing a consolidation at a very strong support, and as long as it maintains itself above this area, then there could be consideration, a real consideration that we could see a potential bounce yet again to these highs we've just come back from. So as it stands at the moment now, 13,100 intraday would be a very clear support area, roughly in that definite. So on a 4-hour chart, for example, I was just going to plot this area here as a very strong support, and you can see price action at the moment now pretty much hesitant at this area. On our 4-hour, we do have a high. We've come from a high. We've had a previous attempt to break higher, and we're trading above the institution at one stage. However, price sentiment just pretty much kept it in check, and we're trading lower. So we have an all-time high, so we can take a price retracement figure. So we take it from the all-time high that we had recently to the low that we saw yesterday. Okay, and we plot it back up. You can quite clearly see that price on a 4-hour chart is very much testing the 23.6% retracement figure. Ideally, we want to be breaking above that, but we also have this 50 period, which happened to act as a clear resistance in the past. We had hesitation in this area, plus the 50% retracement of the initial downside trend coming into play. A lot of indecision, 2 spinning tops, shooting star doji here, and then a bearish engulfing, pretty much telling us that sentiment was looking favorable for shorts again. Here again, we are trading below the institution, so long term we're still negative. Okay, we ideally like to be trading above the institution moving average to give us an indication that price sentiment is looking positive. In this case, we're trading below, so we're still negative. CTC has gone blue. However, we are trading at the underside of a 23.6, and most importantly, we're still below the institution moving average. I'd ideally like to see if this genuine price moving, sentiment moving, bouncing off this 1310, it would need to be trading above these areas. If in any case, trading above the price swing in this case, which is way up here at the 50% mark at roughly 1328. So some more work to be done for this pair to even consider looking long term. This is just a consolidation bounce because we've obviously noticed that 13,100 is a strong support area. Going into today, if we see a bearish engulfing and price failing to actually trade above the 23.6 in our intraday charts, then we could see price consolidating, bearish engulfing later on today or in the next 4 hours or so. We'll just confirm that we should see a rollover and we get a lower swing, and then we should be looking back down to 1310 as our first potential target. And ideally, if on the daily, as we know, we're trading below the institution, price needs to be hitting below 1310 to definitely confirm that we're looking for shorts long term for the remainder of the week. Otherwise, a recorrection at 1310 could be the likely scenario with a bounce higher. The other idea is we could see price breaking above and closing. We do need a nice close above the 23.6 here at 1317.50. If that happens, then we could see continuation higher during the US session. Okay, looking at the hourly chart, you can quite clearly see that 23.6 acting as a clear ceiling level on our hourly chart. Notice before it was a very strong support, bit of resistance. We had that breakout, then we could look at upside movements that was the case. Price was still trading below the institution moving average. However, once it got above that, then we could clearly see that ideally the 50 period moving average and the institution would have been our first target. Here again, you can see price is testing that 23.6 and the institution's above us, but our price is pretty much standing or trading below the RSI 50 here. Got to get above 50 in order to be genuine upside trend. Until then, we could clearly see bearish consolidation here, and then an ultimate scenario acting out as 13. These lows back down here to 13.10 in particular as our first target for this pair. This area in particular has been a very strong support and resistance level on our daily, so that would be our next target if we had a failure here. Hourly, you can quite clearly see back below the 23.6. Still CTC is blue across the board. It is a positive move to the upside. However, if we start seeing a red arrow and then the CTC going red again, would clearly indicate that we should be looking for downside move, which was the case over here. And our target would be 13.10, a break of 13.10, and a bearish close below that. Primarily on our 4 hour would definitely confirm that we should be looking for further shorts for the remainder of the week. Next up is sterling. Let's have a look at sterling. Weekly, we know we've had a bearish engulfing or candle after a shooting star at a very strong ceiling level. We know that 15,900 clear resistance on our daily, and that shooting star via this piercing candle to the upside at a ceiling level and a bearish engulfing afterwards has clearly signaled that we should be looking for bearish sentiment on this pair. So if we look at our daily, for example, you can quite clearly see that we had this upside movement, this pullback. Okay, and the CTC went blue and everything was great, so we looked at potentially price action to head towards this institution moving average. That was the case because previously here in October, November of last year, we had the same scenario, a nice corrective bounce, and then the institution moving average actually kind of bagged and tagged price action as it got into this area here. A lot of indecision, consolidation, sideways, not really going anywhere. A lot of movement in between this part. However, clearly failing on a number of occasions at the institution to go any higher, and price just fell over, and we broke this little consolidation box here, and then we saw price reverting to the downside. The same scenario happens with this here in the case over here that we're seeing. Price has been edging higher into the institution moving average, tweezed the top, price pulled back to a previous support and resistance, and then we've had a bounce on consecutive occasions for this pair. On one occasion, actually broke above the institution moving average and held it for 2 days. Now, clearly, this prior area of ceiling level here, 1500, 900, pretty much acting as a clear support at one stage, now became a new resistance. So ideally, when we had this breakout here, we wanted to see price actually finding support, and then from support kicking on up to the upside. You would have probably gone long here, the high of this candle plus the spread. That didn't materialize because price actually engulfed, taking us back below the 5900. So this became almost a fake out, and then we saw price consolidating and an extension to the downside. The actual play of that was 100%. Smack bang onto 100% on this candle here, and then we see a pullback, and then price action on Friday, as it did on the euro-US dollar. Bearish engulfing, back to this price support over here, not closing lower, and then yesterday we saw price breaking lower. For the first time, price is trading below the 50 period moving average on our daily, okay, since we saw in January. So this is also a bearish sentiment or negative sentiment. We're having a lower swing by this bearish candle forming on Friday, below the institution moving average, below the 50, so it's trading below all the moving averages, particularly on a daily, and the CTC has gone red. So sentiment wise, ideally, if you wanted to, you could place a trade at here at the low end of 15,600 minus the spread, and your stop could be above the 15,700 if you wanted to. Another case scenario, that would be your really aggressive entry. Another one would be here, and for more passive, then your stop would be right up here at 15,800. Take into note you are risking a hell of a lot of on your stop. However, your potential target, is first stop run here roughly around about the 1447, 4800 mark, but ideally our target way down here at 15300 could be on the cards for this pair. as long if this is a genuine breakout to the downside. So a lot of momentum could still be creeping into this pair. I think you just got to be very, very positive on this one. Sentiment at the moment now, sterling's looking a lot less favorable than is the euro, and as it stands at the moment now, this one looks far more tradable than euro at the moment. So just have a look at your intraday charts. Let's have a look. 4i can quite clearly see that price support and resistance here, just above the 156700 mark. You can quite clearly see price trading below all the moving averages. A lot of hesitation through here. Look at this, the CTC not really giving a lot up on this time frame, but look at all this movement. Okay, and for the first time now we're trading below all this movement, which is a clear sign that sentiment is looking favorable downside at the moment. Now there are more boxes ticked for downside movements. So as it stands now, moving averages all above price, lower swings dictating price action downside. Clearly broke a price strong support area at this area here at the 156700 mark. Price has pulled back after the breakout, which is always guaranteed to happen. So you take the high of this candle to the low plus the pullback. If you took it back to these areas here and looked lower, ideally 1557 here would be your first target. 6150 second target, potential targets. These are on the hourly charts. Sorry, the 4 hour guys. So back to hesitation there, 61.8, really overextended down here, 26.1, 43. So a lot of targets to the downside, and you look at these targets on the daily, there's a lot of, yes, there's a bit of hesitation in between, but not a genuine stop along the way. So ideally 15300 could definitely be on cards for a long-term goal for this pair. And if you wanted to, you could just put that on your 4 hour chart. So clearly, there we go. There's our 4 hour era, and you can see how much space there is in between. Bit of consolidation along the way here at 1555. Slight hesitation there, not a hell of a lot to really get. One at 15400, not a really good one either, but you can see though, clearly we have broken below a very strong support. All the institution plus the moving averages above price. Sentiment, we're having a pullback. So if you're on the pullback, just make sure, if you are in this trade, make sure that your stop is ideally above 15700 in particular, just in case price moves well above this consolidation range here, and see how it goes. US dollar Swiss franc is the next pair. Let's have a look and see what's been happening. Price on a daily time frame found a lot of support through at 89 just recently and bounced higher. This is after price pretty much stuck above the 9100 for a long period of time through the latter part of January, through most of Feb, and then we had a break lower. However, that fell to really move lower, and so from the highs here, we saw projection low after the break. Price heading lower than the 61.8, however, coming unstuck, pretty much making a typical U-turn, bullish engulfing, and then price edged high and broke above that previous long-term support, and we were expecting price to find resistance to confirm that it was a classic breakout, then a continuation over that failed to materialize when price broke above on a bullish candle, and then price headed back up towards previous resistance, roughly around the 925 mark. And yesterday's candle pretty much testing that 50 period moving average where price had been before, and this shooting star, almost like shooting star resistance, clearly resistance here. We could see price pulling back. Ideally, if this is to cancel this negative sentiment candle here on our daily, we would need to see price closing higher than 920 in particular, because you can quite clearly see over a 5-day period here, price really coming unstuck. And if this candle plays through and we get a bearish engulfing today and breaking lower than 910 again, then what we're seeing is, if I can just zoom out here, you can see that we've had an all-time high, and then since then we've seen price falling lower and swinging lower. These two candles in particular, pretty much bang on target at 920. A failure here on 2 occasions for price to rally above that area, so still swinging low, then a further swing low here. So we have a bearish engulfing here that's just going to form another top over here, for example, and we can see price edging lower. Okay, so it's very important that today is going to give us a signal. Ideally, after a shooting star, you want to see sentiment, confirming that sentiment is definitely negative. In this case, if we do get a nice bearish engulfing candle like the one before here, a couple of days before, and it breaks lower than that, then it could be telling us that sentiment is favoring further shorting opportunities, because price has failed yet again at a psychological ceiling level. Okay, 1, 2, 3. This could be a fourth attempt at 925 and a failure yet again at that area. So this becomes a very strong ceiling level. So that becomes making nice and heavy. And then you can see the price has been trading in this consolidation line. So if it trades lower than here and it bounces back again at 910, then we could see a bounce back higher again in between these areas. Another case scenario would be if we saw a bearish engulfing below, then you could see price moving back down to these price previous support here at 895, because we've been in the past. And a break below that would take us back to the institution moving average, which is way down here at 850. Okay, so that's a scenario. CTC is negative, and you can see quite clearly we come from a high and we're making lower swings, so that tells us sentiment is still looking favorable. Short at the moment, consolidation short. We have been an upside trend, you can quite clearly see that since August of last year, but we are consolidative at the moment. Okay, and the likelihood at the moment now with that candle yesterday, looks like if we get a nice bearish engulfing here, I could confirm this is another ceiling level here at 925, 920 in particular, and we should be looking for the outcome realistic for the remainder of the week to potentially be bearish. So looking at our 4-hour chart, let's have a look here at 920, 925. We know the ceiling level of 925 is a very strong one. We've had a slight, consolidative break. That was a tweezer, oh, not the tweezer, the shooting star formation. Look at that. Rally to the institution moving image, didn't find any, could not find any momentum in the upside of that, and failed visibly. Nice bearish engulfing, brought price back down again. Here again, same thing. Past couple of days, we've seen price hesitating at the 920 in particular, and the shooting star over here. And then we saw an indecision with the decision candle, and we've seen price falling low over the past 16 hours. So as price is edging lower, this swing, so we have a low to the high, and you can see that the institution moving average 50 and 20 all in play now on our 4-hour chart. Okay, very close together, so sentiment is going to be, price action is going to be quite stunted because of that as we head towards this trend line support. So if we get a bounce on the trend line, and we could have another attempt at 920 very soon. So trend line's got to be breached. A break of the trend line would also take us below the institution moving average here, and then we will be trading below the institution moving average, which tells us price is looking favorable short or negative, and then we should be looking for downside. If that's the case, then the previous support and resistance here at 908.50 would be our first target on our 4-hour chart, and below that we have another hesitation area here at 902, and then all-time low back down here to these areas that we've been to before, roughly around the 930. So definitely two targets in particular. A third target if we have a break of this institution moving average as we speak. If you want to look at fib retracement figures, you could do that. You take the low here, for example, up to the high of the shooting star. 23.6 has been breached. Next target will be 38.2, which brings us back to the institution moving average. 50% would take us back to the price support and resistance level. 61.8 would take us back to a previous consolidation range. Below that, price will be in free fall back down to these areas here at 893. So you can see I'm putting together a clear picture of what price is likely to do if and when this happens. So we get a nice bounce here again, nice bullish engulfing. It takes us above 20.6. Then we should be looking at 100% back up here, 920 and 925 as our next target. Failure than that, and we saw bearish engulfing at this area, clear break below the institution moving average. Then we should be looking at 38.2, 50, 61, etc. to the downside. Hourly chart. Swing highs, you can quite clearly see now on the hourly chart, trend line is going to be in play quite soon. So in terms of looking for price or a particular trade on this one, stand aside, because we are trading quite close to not only the trend line, but it's also the institution moving average, which is acted as a clear support on the 8th and 9th. So just below price as we speak. Looking at the RSI, we've just dipped below the 50. Negative sign. CTC has gone red across the board. Red, 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 red. Okay, so everything's looking negative at the moment. However, the institution moving average and the trend line is in play. Okay, so we stand aside. We want a clear confirmation signal, bearish engulfing to the downside, a clear break below the institution moving average, a break below the trend line.
break below all the moving averages and RSI remaining underneath 50 would definitely confirm that we should be looking for further shorting opportunities. At the moment now, it's telling us we should stand aside because all the moving averages are together, which means that we should see consolidation. We're seeing that playing out over the past, since the Asian Open last night. We've just gone sideways in this consolidative range. Price not really moving, or that's moving very tentatively within this range. So if you wanted to, you could box it, put some trigger signals, break higher over here, close higher on a 4-hour time frame above the 918, or close below this 913 area here. Would definitely take us below these areas, and then we should be looking for trigger signals. But as it stands at the moment now, we are consolidative. Price is hugging that 50 period moving average here quite clearly, percent line, sorry, on our RSI. So no trade until we get a clear, definite reading from the market, which if it's definitely going lower or higher. Last pair of the day was the US dollar Japanese yen. Let's have a look and see what's been happening. Weekly, clearly see that we've broken above the 50 period moving average, and you can see sentiment. If I just zoom out on a weekly, you can see these highs we've come from swing low, swing low, swing low, swing low, all the way right through until early Feb, and then we've had a bounce. We went as far as 75.50, a bit of intervention in between that, but for the first time we're actually trading above both the 20 and 50 period moving average. A lot of momentum to the upside. This is now got smaller and smaller as we've headed higher. Price action is still hugging the top end of these wicks. We've had pullbacks along the way on these weeks, but still trading on closing at the end of the week on the upside of those bands. And looking at the daily, you can see that momentum higher, trading well, very executed. 70, at least a 70-degree angle on this price as it's moved higher. And since then, we've seen price falling back along the way. Let's have a look here. 50 period 161.8. Now price has actually made it to the 261.8 recently. On Friday in particular, we saw price running above it. Now all we need to do is see price actually closing above this area, the 261.8. You can quite clearly see here, well extended. If price can actually hug the end of this this is the 82.30 mark, if we can stay above there, then great. A bit of hesitation over Asian market going to European session this morning. We see a lot of wick trading, but very, very indecisive. There we go. That's that area here on our 4-hour chart. Notice the CTC is well extended blue on either side. Very little red or no red at all. Bit of hesitation in between, but you can quite clearly see the CTC allowing us to know that this break or pullback was a fake pullback without sentiment, and sure enough we've maintained those highs. And at the moment now you can quite clearly see hesitation at this area. Long way to the downside, however, price hugging the upper end of that. A lot of indecision on our 4-hour as we've gone sideways for most of the Asian session going to the European session. So as it stands at the moment now, if you really wanted to take the lows of this previous consolidation to the upside, notice that 23.6 acting as a really great support for this pair. So bring your support down. So that psychological intraday support will be at the 23.6. As long as price maintains those levels on our 4-hour, then we should be looking for consolidation with an upside possibility to occur the longer we go sideways above this 23.6. Okay, the other down scenario would be bearish engulfing at this level, would confirm that we should be looking for further downside. 38.2 would take us back to the prior resistance level before we saw the breakout on Friday. Okay, and a break below 38, we should be looking at 50, 61.8, and ultimately, if that fails, back to the prior support and resistance level or consolidation range back down here at the 80.50 mark. Okay, so what we want to see from price today for this to generally be further just a consolidation with upside continuation is a nice bullish engulfing on support. If we get a bearish engulfing here at resistance, that's going to say that we should be looking for further consolidation. So very, very, very tentative. Make sure you make a note of that. Hourly chart. Let's have a look over here. For example, the quite clearly see the price is consolidating. I just need to make sure, what was that on a 4-hour? Okay, so you can see 82.20 long-term 23.6 area. So if you want to take the prior lows over here, consolidation lows to the upside, quite clearly see that 23.6 is here. Okay, in play as we speak, bearish engulfing, however, still above the RSI, CTC still blue, so we should never look at that as a definite confirmation. We want to see RSI below 50, we want to see red across the board to genuinely see that that's a genuine move to the downside. Until then, it's just consolidating above 50, above the 23.8, 23.6% fib consolidation above the institution moving average and above price as we speak. Both the 50 and 20. So consolidating as the prices come together, moving averages 20 and 50 together, telling us that price is not really going anywhere. We want to see a bullish engulfing at this level here, or bearish engulfing to definitely confirm downside movement or upside movement. So patience is key for the US dollar Japanese yen until we get a definite break higher than 82.60 or break lower than this 23.6 here bearish consolidate to the downside. That's it, guys. Hope you have a fantastic trading day. There's some news out today. We have the EcoFin meetings. Have a look. All the what's the word I'm looking for? Finance ministers of the EU member states are all having talks today. Could be very, very important regarding news or price action today. So make a note of that. That's an all-day event. What do we have? We have the overnight call rates, interest rates for Japan, which stayed unchanged at 0.10%, 0.10%. We've got trade balance figures for sterling at 9:30 GMT this morning. At previous figure was negative 7.1 billion, expecting a forecast of a further negativity of 7.8, so 0.7% different. If that comes out even worse, then you're going to find sterling's definitely going to take a bit of a hit. Then we have the German economic sentiment, which is important. Then we have ECB Draghi speaking at 11:30 AM GMT. Also important. You might have some more news about the actual Greece and apparently Spain's the next one now that everybody's talking about. It just goes on and on and on. And then we go into the US news. You have core retail sales month figures, retail sales month and month figures at 12 PM GMT this afternoon. Then you have the FOMC statement, very, very important one at 6:15 this evening. So make a note of that. Very, very important piece of news. The FOMC uses communicate with investors about the monetary policy. Contains an outcome of their votes on the interest rates and other policy measures alongside. So very, 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 very important piece of news. That get a glimpse of if there's potential changes for interest rates coming up, etc. So make a note of that. Other than that, just keep your trading simple. Make sure you have a big understanding of the larger picture. Make sure that your money management's all in place. Stick with your plan. Don't deviate from your plan. Don't change the plan mid-trade. Find something that resonates with you and stick with it. Get good at it. Become master that particular trading strategy. But until then, I'll see you tomorrow morning. Trade Serene.